Mining last year was very largely impacted by the first onset of the pandemic. But this time around, it's different. You've got much higher vaccination rates. In some of the mines, of course, the managements have ensured that most of their workers, if not all of them, have actually been vaccinated. So there's no need for the type of shutdowns in mining operations that we saw last year that were mandated by government from above. There will obviously be restrictions on cross-border movement of people, but that doesn't affect the vast bulk of mining employees that are actually at the mine face. So I don't think we're going to see the same type of effect that we saw last year of mine shutdowns and disruptions to volumes in the mining industry.
All right, let's focus on the news out of the Fed then. Jerome Powell saying that, perhaps transitory was not the best choice of word when describing inflation, saying it is proven to be more persistent and sticky than anticipated, and that the Fed will be discussing accelerating its tapering schedule. We haven't had gold really move on inflation fears. We did see gold react a little bit to news of Omicron and then drop after we heard that we're going to have a more hawkish Fed.
Yes.
What do you see for gold in the next 3 months, given what we heard from the Fed?
Traditionally, gold has been a hedge against inflation. There is a mistaken view out there that higher interest rates would impact the price of gold because supposedly people are borrowing money to buy gold, which I think is a totally bogus construct. Most people are using gold as a savings method, not as a method of borrowing money to then put into gold. So I don't think that that's going to happen. Is gold a good place to put your money in an inflationary scenario? It is if you perceive that the Fed and other central banks are not going to protect your currency by raising interest rates. Because it's only by raising interest rates that you can ultimately beat the inflation beast. And we saw that back in the 80s and the 90s when the Volcker Fed actually came down hard via really high interest rates and killed off the inflation beast. But there's no reason why gold should go down in that scenario, except if the central banks soft pedal on inflation. And that's what they've been doing so far. They've been saying, oh, no need to worry. We're not going to raise interest rates. Things will resolve themselves. But as we've seen with inflation breaking out, particularly in the US and the UK, inflation is out of the box and it's out of control. And only interest rates will damp it down. And
we just got data out of the European Union that inflation is actually at a 24-year high in the Eurozone. Hitting a record 4.9% for November. Of course, we focus on the Fed a lot when it comes to looking at the gold price, given it's denominated in dollars.
Yes.
What makes people think that the Fed is going to be able to control inflation if they've been so wrong about predicting the transitory or not so transitory nature of inflation? Why does it seem as though gold investors have confidence in the Fed that they'll be able to control inflation?
I think they're mistaken. The Fed has basically soft pedaled up until now. The inflation beast has got out and it's going to take a lot of effort to get it back in its cage. And that means interest rates are going to be higher for longer. And that is going to have an economic effect, which ultimately it's going to impact property markets. It's going to impact companies that are highly leveraged. Already we're seeing in China, for instance, these big property crashes that are linked to overextended property development.
So you do see the Fed moving to raise rates at a faster pace?
Absolutely.
Which signals to typical investors that the Fed is going to do something about inflation if it's raising rates, which is why gold doesn't respond.
But people are still doubting that when push comes to shove, that the Fed will ultimately push the button and raise the rates enough. Raising rates tiny increments is not going to achieve anything. It's just going to create expectations of higher rates, but people are then going to be waiting, well, when's that going to happen? Or is the Fed going to then backtrack? Particularly if the economy starts to get weak, because higher interest rates obviously are going to be a burden on the economy, but also if the Omicron issue that you mentioned before actually comes around to sort of bite growth, bite consumption, and make for weaker economies.
All right, but Chris, we have seen gold stubbornly not react to these inflation concerns. What is your outlook for the precious metal then for the next year?
I think ultimately it does need to go up, and it will go up, because people have got no faith in keeping their money in currency or in savings as a means of protecting their currency. And gold is traditionally seen as a safe haven, where you can put money and protect it from inflation. Now, that may not be correct, but that is generally what the perception is. So the certain part of the population that switch between precious and dollar savings or currency savings are going to be considering, okay, if inflation's breaking out, where's it better for me to put my money? Particularly if property prices start to go down. Property has been a big haven now for 30 years in most Western economies. If property prices stop going up or start to go down, people are going to be saying, well, where do I put my money? Because property has been seen as like a sure bet for so long. They'll be looking for the next sure bet.
All right, so gold is a play to currency devaluation, dollar debasement.
Property weakness.
Do you have a price target for gold for the next year?
I would not be surprised if we see gold above the 2,000 level over the next 12 months. But I'm certainly not going for some of these crazy predictions that are out there of, multiple thousands in increments. That's just not going to happen. Silver could get back towards the $30 per ounce level as well. But really at the moment, I would see higher prices, but nothing crazy.
All right, so 1 year outlook for gold, 2,000. 1 year outlook for silver, $30.
Closer to 30, yes.
5 year outlook for gold?
Closer to 3,000. With silver, closer to 40.
Okay, but not these great breakouts
that
some people are forecasting. Why not?
Well, if interest rates do move to a higher level and savers have not been really paid a decent return on their money for decades now, people might start to save money again. We saw it briefly during the pandemic last year where savings rates all around the world went up because people couldn't go out to restaurants and they couldn't go on holidays, and so their savings started to build up. This would be like a more conscious decision that as interest rates are higher, there's a decent return from saving, which just hasn't existed for a long time.
No. Let's talk about silver, though, because silver has been stubborn in that it's not only not reacting to inflation and currency devaluation concerns, but it also hasn't rallied as many people would expect it to on this clean energy movement, on electric vehicles, on the decarbonization trend.
Yes.
Why not?
Well, silver production's going up. Silver and zinc and lead are very much joined at the hip because there's more zinc production going on because the zinc price is up. Silver is a byproduct of that mining. Whether people want more silver or not, more of it will be produced. So there's a lot of silver around where we don't have a shortage situation at the moment. So that's the main reason why it's not going up. And of course, people also see silver as a poor man's gold. So if you have enough money to buy gold, why do you bother with silver? But if the poor man decides he wants to buy something, he gets more bang for his bucks by buying silver.